So you've opened up a stock chart and instantly felt completely overwhelmed, right? We've all been there. You're staring at this wild, jagged landscape of red and green candlesticks, zigzagging lines, random spikes, and you're just thinking, how does anyone actually make sense of this? To most people, it's just pure noise. But what if I told you there's a hidden order hiding right in plain sight? Well, in today's explainer, we're decoding the actual language of the markets. We're going to dive into a really fascinating concept drawn from the research of Robert and Jens Fisher. See, the Fishers spent years analyzing Fibonacci trading tools, candlesticks, and all sorts of chart price patterns. Their goal? To figure out which ones actually provide high analytical value. They wanted to cut through the information overload and keep only the strategies that truly matter across different market conditions. And this brings us to a massive question, literally the mystery at the core of our explainer today. What do the absolute most successful, most reliable trading tools and patterns all have in common? Is there just one single unifying denominator? Well, the answer is the number 3. That's it. The magic figure 3 is essentially the secret DNA underlying all technical chart analysis. And I promise you, once you see it, you literally cannot unsee it. At first glance, a big collection of chart patterns might just look like a completely distinct set of formations. Totally unrelated, right? But look closer. Every single one of them incorporates the figure 3. We're talking 3 waves in price extensions, 3 peaks and valleys in triple tops, 3 points in triangles. The authors argue that if you just filter out all that chaotic market noise and exclusively look for these 1, 2, 3 patterns, your overall analysis becomes vastly safer and way more accurate. You really don't need a supercomputer to do this. You just need to train your eye to spot the magic figure 3. Section 1, Trend Reversals. 3 points for change. Okay, let's dive right into this. The holy grail for a lot of traders is knowing exactly when a market trend is exhausted and about to pull a U-turn. Before we get into the specific charts, we need to establish exactly what we're looking for. Broadly speaking, price patterns fall into 2 main categories. You've got reversal patterns, which basically signal that a prevailing trend is dying out and the market is about to reverse direction. And then you have continuation patterns, which signal that the market is just taking a temporary pause before resuming its original path. First up, let's hunt for those reversals. You know, the absolute most famous reversal indicator of them all is the head and shoulders formation. It's widely considered one of the very best chart patterns for locating a trend reversal, and you'll often find it at market tops. Let's rhythmically count this out together. You've got peak number 1, that's the left shoulder, then peak number 2, the head, which is the highest point right in the middle, and finally peak number 3, the right shoulder. Boom. There's that magic figure 3 again, beautifully structuring the market's shift in momentum. But here's the thing. Identifying those 1, 2, 3 peaks is really only half the battle. The crucial part? The execution. You have to draw a neckline connecting the valleys between those peaks. The pattern is absolutely not complete, and you definitely shouldn't act on it until the market price breaks right through that neckline on a closing basis. The magic of 3 gives you the setup, sure, but that neckline breakout? That's what gives you the green light. Let's see how this logic builds into another classic setup, the triple top and triple bottom. In this scenario, the market doesn't actually make a higher high in the middle. Instead, it hits a horizontal resistance ceiling, or support floor, exactly 3 times. 1, 2, 3 strikes, and the trend is out. If that third peak in a triple top happens to be a false breakout, meaning it tries to push higher but totally fails, wow, that is a massive flashing red light telling you a trend change is imminent. Section 2, Continuation Patterns, Taking a Breather. So what happens when the magic figure 3 tells us the market isn't reversing at all, but is actually just pausing? That is exactly where these next patterns come into play. Notice how the trend lines in symmetrical, ascending, and descending triangles converge. They act almost like a giant funnel. The market price just gets squeezed tighter and tighter within these boundaries. It's essentially coiling up like a spring, building all this potential energy for its next big move in the direction of the original trend. So how exactly do we use the magic figure 3 here? One word: safety. It is incredibly easy to fall for a false breakout when a market is consolidating inside a triangle. But the rule drawn from our source material is simple, though it does require iron discipline. You have to wait for 3 peaks and 2 valleys, or 3 valleys and 2 peaks inside the triangle. Yeah, you might occasionally miss the very start of a breakout, but demanding that full 1, 2, 3 count, it filters out the fakeouts and dramatically protects your capital. Patience literally pays off here. Section 3, the 3-wave PHI-ellipse, a dynamic trading tool. We've looked at static horizontal lines and converging triangle lines. Now, let's transition to what I honestly think is the most dynamic and fascinating application of the figure 3 in this entire explainer. We're moving from straight static lines to a living, breathing shape. Allow me to introduce you to the PH-ellipse. And let's be clear, this isn't just any random oval you slap on a screen. It's a highly specialized trading tool where the shape of the ellipse is actually defined by a mathematical transformation of Fibonacci ratios. You know, those famous mathematical sequences found everywhere from nature to market momentum. What makes this tool so incredible is that it's designed specifically to surround or circumvent a three-wave price pattern. It's a geometrical tool meticulously engineered to filter out the noise of every minor peak and valley over time. Tracing the ABC structure, you can see how the initial 1, 2, 3 impulse and corrective waves literally form the physical boundaries of the ellipse. You've got a starting point and 2 side points. The very moment you have those 3 points, you can begin to draw the PHI-ellipse. The entire underlying structure is perfectly, fundamentally built on that 3-wave pattern. Let's break down the anatomy of this movement just a bit more. Wave 1 is your first impulse wave. Wave 2 is the corrective wave moving against it. And wave 3 is the second impulse wave moving right back in the direction of the first. But here is the absolute crucial takeaway. The shape of the PHI-ellipse is dynamic. While its perfect final form exists inherently from the beginning mathematically, you, the trader, have to wait as it develops. It might become thicker, thinner, longer, or shorter as time actually goes on. Watching this dynamically in action is amazing. You can see how real market prices bounce around, touching the outside of the ellipse several times without ever destroying the pattern. It's literally containing the chaos. And the safest trading signal? Well, it only occurs at the very, very end, when the price finally breaks out of the completed shape, which usually signals a counter-trend move. You really have to wait for the magic of 3 to fully play out before making your move. Section 4, Simplifying Strategy, the Power of 3. Let's take a step back and bring all of these concepts together. We've covered head and shoulders, triple tops, triangles, and that advanced PHI-ellipse. So how does this singular focus on the number 3 actually simplify your day-to-day trading strategy? Adopting the magic figure 3 as your baseline rule is practically a superpower. It instantly filters out the chaotic noise of the market. It increases the safety of your entry signals by demanding hard confirmation. It totally stops you from overanalyzing every single minor blip on the radar. Ultimately, it strips away the emotion and promotes a highly disciplined, systematic approach to trading. Honestly, if you don't see the 1, 2, 3, you simply don't trade. It's that simple. I want to leave you with this incredibly powerful quote from Robert and Jens Fisher. They say, "This book contains a great deal of essential information for successful trading, but the necessary discipline and patience can only come from you." I mean, that perfectly captures the essence of this whole explainer. The patterns absolutely exist. The magic figure 3 is right there, mapped out in the geometry of the markets. It gives you the ultimate roadmap. But having the patience to sit on your hands and wait for that 1, 2, 3 count to complete, well, that discipline is entirely up to you. So here's my final question to you. When you fire up your charting software tomorrow morning, how are you going to look at those jagged lines differently? Are you just going to see the chaos, or will you start hunting for the secret code? Start looking for the magic figure 3 and see how it completely transforms the way you understand the market. Thank you so much for joining me for this explainer. Keep learning, stay disciplined, and I'll catch you next time.